The meetings, albeit encouraging, are usually just a step in the right direction, but without any concrete action. And I think it's to do with those reasons I outlined before. And that's kind of shifted our strategy a bit lately. So we've tried to take a different approach of actually doing things with governments instead of proposing things and hoping that they will follow through on their own. So we're proposing things like creating sandboxes to facilitate Bitcoin adoption in very small, specific, targeted regions. We started doing some groundwork for projects to start Bitcoin adoption, with maybe networks of ATMs or things in different countries too. So there's a lot of different things that we're trying differently now that are, I guess, supportive of the overall education and high level engagement, but may lead to actual implementation of strategies faster than just pure engagement and discussion.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Samson Moe dives into nation-state Bitcoin moves, IMF roadblocks, Bitcoin bonds, privacy, and the coming monetary shift. Let's watch.
Countries keep electing socialist governments into power because they keep on giving people free things. So they keep getting voted into power. But it's kind of the same thing on a more supranational scale with the IMF. So I don't think that it's in their interests as people working for this organization, or even the organization itself, that countries do move into implementing a Bitcoin strategy and stepping on their way to a path to repay the IMF. Did ruffle some feathers unknowingly and without the intention to, but I think a lot of Bitcoiners are curious about what's happening exactly, and the communications are very unclear. It's more like, trust me, or trust us. We're still a Bitcoin country and everything is great. But as Bitcoiners, I believe we are inclined to question things and try to seek clarity and answers, right? It's the whole premise of don't trust, verify. But it's not really clear what exactly is happening. President Bukele has said this, quote unquote, does not stop. I guess he's referring to their buying program. But it is very clear in the IMF agreement, which El Salvador agreed to, that they can't buy anymore, along with a number of other details like the unwinding of their fund to fuel the swaps between USD and BTC, as well as the Chiva wallet itself, like you mentioned.
Bitcoin just hit a wild new milestone. The average buy-in price for short-term holders has soared past $100,000. That means recent speculators, those who've entered the market in the last 6 months, are now six-figure buyers. According to on-chain data from Glassnode, these investors are feeling the heat as Bitcoin's price action becomes more volatile, leading to major profit-taking. In just 24 hours, a staggering $3.5 billion in profits was realized, much of it by long-term holders cashing in near all-time highs. This isn't just a small dip, it's a sign that even the most committed diamond hands are giving in to the pressure of recent gains. And that says a lot. With nearly 99% of all Bitcoin supply in profit, the urge to sell is hard to resist. Interestingly, this frenzy of activity includes some historic moves. A mysterious wallet holding 80,000 BTC just came back to life after 14 years, transferring half of that 40,000 BTC to Galaxy Digital. Whales, it seems, are making their moves too. Still, there's a silver lining. With short-term holders' cost basis now above $100,000, that level could act as a psychological and technical support zone if prices take a deeper dive. As the market churns, all eyes are on the $100,000 mark to see if it holds.
I would say the Aqua adoption story is going very well. We didn't expect it would take off so rapidly, but people love the concept of a simple, easy to use wallet that supports stablecoins, Bitcoin layer 2, and you can kind of swap between all these different layers. So we kind of hit perfect product market fit on our first shot, which is pretty cool. And then we recently rolled out the beta of the Dolphin card. And again, that's seen a ton of interest from people. And again, to our surprise too. So we've kind of like hit two things out of the park on our first shot. And it's very encouraging, I would say. So the goal of Aqua is to create a simple wallet to onboard the next billion people to Bitcoin. That is the mission, full stop. And to do that, we need to be able to give people a utility which just simply works. It's their go-to wallet, their daily driver. They can use it to interact with different services, which we're adding more and more of. But the base use case is transacting Bitcoin. And one of our big target markets is Latin America, where stablecoin usage is almost it's everybody almost. They need stablecoins to protect themselves from their currencies, which are rapidly inflating away. So we support swaps from Tether, other Tether chains into the Liquid chain, and recently the Liquid issuance, the Liquid Tether issuance, has increased to 100 million on the Liquid blockchain. So that's a good sign that Liquid adoption is picking up, but it also adds more liquidity for swaps to go into Liquid. And in many ways, Liquid is a superior network for stablecoins because you have privacy through confidential transactions, and the fees are more predictable. It's like something like 3 cents, 3 or 4 cents a Tether transaction. Whereas on Tron, I think they're getting up to $2 a transaction now. But given that a big portion of our user base is in LATAM, it's really important that we do offer stablecoins. And
Bitcoin took a sharp dive early Tuesday as a massive whale from the Satoshi era suddenly started moving and selling coins. The price of BTC briefly dipped below $117,000, hitting an intraday low of $116,218 before recovering slightly. This dramatic move has stirred fear and speculation across the crypto space, as many wonder whether this ancient whale is behind the sell-off. According to data from Lookout Chain, the wallet in question holds more than 80,000 BTC worth over $9 billion at current prices. Just hours ago, it transferred 9,000 BTC, valued at over $1 billion, to Galaxy Digital. That was quickly followed by another massive transfer of 7,843 BTC, putting even more pressure on the market. Galaxy Digital, it appears, is already funneling some of these coins into exchanges like Binance and Bybit, where they're likely being sold off. The ripple effect didn't stop there. Another large holder responded by closing a long position and going short, betting on further price declines. This chain reaction of fear, profit-taking, and position liquidations has already led to over $400 million in long positions being wiped out in just 4 hours, according to CoinGlass. With whales moving billions and panic spreading, the market is now holding its breath to see what happens next. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.